Welcome to 6 African Trade Talks, the show that brings you closer to the intra-Africa trade business world. I'm your host, Chad Chawanda. In this episode, our guest is Lavanya Anand. Lavanya is an angel investor and VC with 5 years experience in East and West Africa. Lavanya, welcome to 6 African Trade Talks. How are you?
Hi, Chad. I'm doing well. How are you?
I'm very well, thank you. Before we start, we'd like to hear a word from our sponsors.
Would you travel to Cape Town for business or leisure? What if you could combine the two? Well, you can. With Optimum African Experience, Cape Town Leisure Experience, with partners such as the University of Cape Town, CEDA, Kadena, Luminary, and Prime Focus. Experience the best of Africa.
So, Lavanya, tell us a little bit about your journey and experience with the investment space in Africa.
Yeah, sure. Actually, I grew up in the US, but I was always very interested in emerging markets and international development. And I started to learn about Africa investments and venture capital and the world of impact investing about a handful of years ago. And it got me really excited because I wanted to do something that was mission driven, but also, like I said, focused on emerging markets. And so I actually started my investing journey in 2018. I joined a firm called Vested World. It's headquartered in Chicago, which is where I was doing my MBA at the time, and started interning with them for about 6 months and just learning a little bit more about the ecosystem in East and West Africa. And then I actually joined them full time when I graduated in July of 2018. Shortly after that, I actually moved to Kenya to set up their first kind of physical office on the ground. And so I've been now based in Kenya since late 2018. And the focus has primarily been on investing into startups in East and West Africa. So markets like Kenya, Nigeria, Ghana, Rwanda, and Uganda, and typically between the seed to Series A stage. And then I've also started on my personal investing journey into startups a little over a year ago, so in early 2022, and have now also made 3 and hopefully soon 4 personal investments in African startups.
Amazing. You are doing something that is commendable. I believe that SMEs, startups have the capacity to create employment across our continent, being a startup founder myself. So that's really great. What lessons can you share that can help someone who wants to invest in Africa? You came to Africa, you are physically in Africa.
Yeah, definitely. I mean, first of all, it does help to have some physical context, right? So even if you don't necessarily live here, I think visiting the continent, especially the markets in which you're interested, is important because I think sometimes what you read or hear in the media and on the news can be very different than what you actually see on the ground. And so, I would encourage anyone who is interested to come and visit. I think you'll like what you see and you'll be pleasantly surprised by what you see. But yeah, beyond that, I would say that it requires patience. The African VC ecosystem is very nascent compared to most developed markets in the world. So I would say really only picked up in the past 10 years. And for context, in 2018, there was only about $500 million of VC funding that went into the continent. However, in 2022, it was more like $5 billion that has gone into VC funding. And so there's been a huge acceleration and growth over the last 5 years, but compared to markets like India or Europe or the US, it's still quite small. And so I think with that, you need to have this long-term vision and believe in the potential of Africa in the longer term, which does require some patience, right? So if you're just looking for a quick buck where you invest and you're hoping to exit within 2-3 years, you're probably not going to see that yet. You'll likely need to be investing for at least 5 to 10 years into companies to see the return. The business models are still developing, they're still pivoting. There's still a lot of gaps, I would say, but it's progressing well. And I'm obviously excited about the long-term vision of the continent and the potential that's here. So that's kind of one lesson. I think secondly, copying and pasting business models from other markets doesn't always work. What's different about Africa is that it is made up of 54 different countries, which are all quite different when it comes to consumer behavior, to regulation. There's a lot of nuances. And so you can't just take one model from one market and just replicate it somewhere else. So you do have to kind of think about what is the local context and why will this model work in one place versus another. And then I'd say another lesson, I think consumer trust and education is also quite important in the African context. Oftentimes you want to just apply a pure tech solution to solving a problem, but that may not always work because maybe the consumer here is less digitally savvy, or maybe they have trust in kind of more brick and mortar type of solutions. And so I think what actually may work here better is some kind of omni-channel approach or a hybrid of an online and offline solution where you can really target the consumers where they're at and grow along with them, as opposed to just putting a solution that may not necessarily work right off the bat. And then, yeah, I'd say maybe my last lesson that I'll share is that with most markets, timing of making an investment is very important. So it may be a great team and a great idea, but if the timing isn't right, it may not be successful. So you also have to pay attention to some of the macroeconomic trends that might be providing tailwinds for a particular business model in a particular market.
Interesting. You mentioned some key insights there in terms of moving from 500 million to 5 billion. We had a guest here, Ted Galante from Mangwana Capital, an earlier episode. And Mangwana Capital actually was the first venture capital fund that was supported by pension funds in Zimbabwe, first ever in Zimbabwe. So it just tells you how this venture capital world is evolving in Africa. So Lavanya, what is the lowest ticket price? What amounts are we talking about in African VC based on your experience?
There are investors and funds that range from as early as your pre-seed round. So this could be kind of friends and family or angel investors, all the way through, I would say, to like Series B, Series C, and onwards up to private equity and eventual exits. From my experience, typically at those earliest stages, let's say pre-seed, investors are coming in with, let's say, anywhere from $50,000 to $500,000 into a pre-seed round. And then I'd say at seed, it becomes, let's say, between $500,000 and $3 million in total. And then you have your Series A stage, which are a little bit more mature companies that are raising somewhere between, I'd say, $3 million and $10 million. So from my personal experience, the smallest check that we invested at Vested World was $85,000. And then the largest check that we invested was $1 million. But the total round size ranges quite a bit. Oftentimes, we would invest alongside other co-investors. So we weren't necessarily the only ones coming into a round, but that was the ranges that we saw. And I'd say the last few years, there's been quite a few new pre-seed and seed stage investors that have come in who are writing those kind of smaller tickets, somewhere between 50K and $1 million, let's say. There's still a bit of a gap at the later stages. Over the last couple of years, there were a lot of international funds who were coming in and investing at Series A and Series B, but with the current market environment, some of those funds have pulled out. So I'd say there's still probably a bit of a gap at the Series A and later stages for companies that are reaching there. But then once you maybe reach relatively mature stage where maybe you're already profitable, maybe you're doing in the tens of millions of dollars in revenue, now there are very growth stage or later stage investors who might be available, like private equity investors who can do checks of 20, 30, 40 million, or potentially strategic acquirers like corporates who are looking to actually just acquire startups and bring them into their business.
Interesting. And I believe that anything starting from around your 50, obviously in Africa, can be impactful. So you spoke about investing with other investors. So would you syndicate if someone comes to you and says, okay, this is what it is, and you like it? Have you seen some syndication where that VC goes in and brings others on board?
Yes, definitely. I'd say that's probably how most of the deals that I've seen have been run, where there's, let's say, one lead investor who is the one setting the terms and negotiating with the entrepreneur. They may not take the full round. Maybe they take 50% of the round or 70% of the round, and then they go to co-investors that they like working with to bring in and fill in the rest of the round. Alternatively, we've also seen cases, this happens more at the earlier stages, where there's a company and the founder is putting a syndicate together themselves, right? So there may not be a quote unquote lead investor, but maybe they're finding a few investors. The founder might be setting the terms themselves using like a safe note, and then they're finding investors to commit to those terms. And it basically just becomes a group round where whoever is interested comes in and invests into the company at an early stage without any quote unquote lead investor. And then, in the next round, when the company is a little bit more mature and they need to like set a price to the round, now they'll go out and find a lead investor, or maybe one of the existing investors will decide to lead that next round.
Perfect. Thank you very much for sharing. Travel experience. Where else have you been to Africa?
So Yeah, like I said, I initially landed in Kenya, but my investing experiences, I've had to travel quite a bit for diligence, for market research, et cetera. So the countries I've personally visited, so beyond Kenya, I've been to Tanzania, to Rwanda, Uganda, Ethiopia, Nigeria, and Ghana. I might be missing a couple here. There's definitely more on my list, but those are the markets where I've visited, especially in an investment capacity. Yeah, I'd say the one I've probably spent the most time in outside of Kenya is Nigeria, just given how much activity from a startup and investment standpoint is happening out there. At Vested World, we had quite a few portfolio companies there that I was personally managing. And so I've spent quite a bit of time there and also bullish on that market in addition to Kenya.
Interesting. And the impact of technology, any impact on technology based on the markets that you've visited?
Yeah, I mean, definitely. I think Kenya is definitely one of the more tech forward markets. You look at things like mobile money and M-Pesa and the digital infrastructure that exists to support that. I haven't used cash in Kenya for, I don't know how many years now. I mean, almost everywhere that I go accepts mobile money. So that's just one example of the impact of technology. Then you have a place like Nigeria where it's a very large population, but it's a lot more fragmented, right? So you have a lot of pockets where there is high use of technology, and then you also have a lot of pockets where technology doesn't necessarily work and things maybe are a bit more broken. But I think that creates a lot of opportunity, right? So there's so many entrepreneurs there who are trying to address some of these gaps and issues around technology infrastructure, whether that's relating to payments or mobility or digitizing commerce. You're seeing technology play a role where by increasing the digitization, now you're developing data, or you're enabling a database, which can now be used as the baseline infrastructure and foundation to build more technology on top of, right? So one example is like embedded finance, access to credit, right? In order to provide access to credit, you need some underlying data to build your credit algorithms off of. Without technology, you may not have that data, right? So you're seeing the rise of, for example, access to credit because of what technology is doing. So that's just one example.
Thank you for sharing. Before we continue, I would like to hear a word from our partners. IATF is an initiative that supports the implementation of the AFCFTA. It is organized by Afreximbank in collaboration with the African Union, the AFCFTA Secretariat, marking an important step to sustainably address the gap in trade and market information for the successful realization of the AFCFTA objectives. Ms. Kanayo Awani, the Executive Vice President of Intra-African Trade Bank, Afreximbank, said a lack of access to trade and market information is one of the key reasons for the low level of intra-African trade. We hope to see you at the next IATF. Lavanya, based on your experience, what are the top 3 deal breakers and the top 3 factors that would motivate you to invest in a startup?
So maybe starting off with the top 3 factors. It somewhat depends on the stage of company, but let's assume relatively early stage company, but company that has some level of traction, which is where I've had the most experience investing. So number 1 would be team and the founders, right? So what is their prior experience with the particular industry? Is it relevant? What are their connections in this space? What kind of edge or advantage do they have to execute and succeed well in this space? And then also, do the founders have a strong working relationship with each other? And do they have the ability to hire the right people around them and build a strong vision that convinces other people to join them? So I'd say team is definitely number 1. Number 2 is the overall market attractiveness and market size. What is the problem that they're really trying to solve for, and how many people or businesses have this problem, right? So what is the value of that market? Is it applicable just to one country or one market, or can it be replicated across multiple markets? So really, what is that size? Is there a greater than $1 billion opportunity here if the company were to go after it? Third, I would say is related, but I'd say is product market fit. So even if it's an early stage business, what is the product and what are your early customers or users saying about the product? Is there a true value proposition, and are people willing to pay for it? How well does it fit and serve the needs of that population that you're serving? Are there people willing to use it? Are they paying for it? Are they coming back? Does it solve the problem that you're actually trying to go out and solve? So those are the 3 factors that would motivate me to invest. I'd say on the deal breaker side, there's quite a few, but let's go with the top three. I'd say one, again, the same way a team can make an investment, I'd say a team can also break an investment. So one thing I often look for is the coachability of a team, especially the founders. Are they willing to pivot, for example, if they feel like something is not working? Or are they willing to take advice from investors and advisors? Or are they very, kind of stuck in their way? And if one thing doesn't work out, they're not willing to change or listen to others' advice, right? Because with any kind of investing relationship, especially in the VC space, it's almost like entering a marriage for the next 5 to 10 years. And so you need to be able to work with each other, right? If you feel like one party is not listening to the other, then it's not going to be a good working relationship and there won't necessarily be trust. And so I think that's the big thing that can break a deal. I'd say secondly, if a founder is not thinking big enough or large enough in terms of their broader vision, then it's probably not a great fit from a venture capital return standpoint. So for example, if your financial projections over the next 5 years only show you reaching $5 million in revenue, then maybe that's not a large enough vision to support a VC type of investment. So that would be another deal breaker. And then I'd say the third one is probably valuation and the terms of the investment. So oftentimes we'll see companies where they're doing their pre-revenue or just have a little bit of revenue, but they want to raise at, let's say, a $20 million valuation. For me, that's a deal breaker because we're in the business as VC investors of getting a return on our investment. And so we need to also adjust the price of the deal to the risk that we're taking on so that we can ensure that we'll at least have some winners in our portfolio. And so I think where the valuation doesn't match the level of risk in the business, that would be a deal breaker for me.
When you spoke about the valuation, it also resonated. A lot of people across the continent are always chasing lower numbers. And I think they don't speak to what capital expect. So you'd find someone saying, they don't want to invest in my project and I'm going to make $1 million. But they don't realize that outside there, $1 million is really not much.
Yeah, and I think there's different capital that serves different financing needs, right, and different business needs. So there might be other funding out there that's a better fit than venture capital. As a founder, I wouldn't go for venture capital funding just because that's what everybody's doing. You have to kind of look at your own business and what your growth aspirations are and find the capital that fits.
Certainly. In terms of business ventures and investments, what product or service do you think is hot right now or will be hot in the future?
In terms of broader sectors that are getting a lot of attention right now, I'd say, fintech has always been the largest recipient of VC funds in Africa. I'd say a second one that's rising right now, especially, is climate and climate tech. And that's, I think, because of the attention that climate and sustainability is getting around the world and just the urgency that's required right now to come up with solutions that solve for climate adaptation, mitigation, resilience. But yeah, in terms of products and services that are hot right now, I'll mention a couple. So on the fintech side, I mentioned this earlier, but embedded finance, I think particularly within supply chains is currently still very hot. So this applies to value chains like FMCG, agriculture, commodities. There's always a need for access to credit, but now even beyond credit, there's other financial products that can be embedded like savings, insurance products, et cetera. So I think, as again, some of these value chains become more digitized, there's more data available, and there are many companies that we're seeing that are plugging into existing ecosystems to provide with an API type of layer to come in and provide access to loan, savings, insurance, and other financial products. So I'd say this is definitely an area that is still hot and is continuing to rise and being applied across various value chains across the continent. I'd say then within the climate side, an area that's hot is electric mobility. So you're seeing this apply to everything from electric motorcycles to electric cars and ride-sharing services, and now more recently also electric buses for mass public transport. So I think that's a really exciting space as well. And beyond just the actual automotive industry, there's also the infrastructure that supports it, right? So charging infrastructure that is coming in alongside of these buses, motorcycles, and cars to enable the electric mobility sector to thrive. So I'd say those are a couple areas that I think are quite hot right now. In terms of what I think will be hot in the future, this is my probably a bit of my personal investment thesis, but I think in the next 5 to 10 years, I'm really bullish on the consumer sector, and this includes local brands, online and offline, that are serving the African consumer. As many of us know, Africa has like the youngest population in the world, and I think many of them are probably still teenagers, but are entering the workforce and slowly started to earn income, and over time disposable income as well. And I think they're going to spend their money quite differently than generations before them. I think they're going to want products and services that feel really fresh and modern and young, and ideally personalized for them. And this can apply across verticals. So everything from electronics to beauty to clothing and accessories, home goods, FMCG. So I think there's quite a bit of potential in this like B2C and consumer sector using both, again, online and offline channels.
That's quite interesting. I don't know if you know about Tech a Lot in South Africa. About 4 or 5 years ago, they were doing on average plus minus $200 million turnover. It's $1 billion now, and it's an e-commerce platform with consumer related products and some few B2B related products, but mostly it's like the Amazon of South Africa.
I've heard about it. I'm not super familiar with them, but I definitely know that they're kind of taking that Amazon approach.
No, great. Any book or podcast you'd like to recommend to our listeners?
Yeah, definitely. I'm a big podcast person. I think it's a great way to learn about the industry and trends that are happening. There's one in particular actually that I really enjoy that's specific to Africa, and that's the Flip Africa. So they oftentimes feature founders from various sectors across the continent, and we'll do an interview with that founder or maybe investors that have invested in a particular sector. And I find it really informative, going deeper into certain business models and understanding trends and themes on the continent and who's active in which sectors and what they believe are the trends that are happening in those sectors. So I'd say the Flip is definitely one that I listen to regularly. Then there's a handful of other kind of VC-oriented podcasts that I like that are a bit more maybe US-centric or globally centric, but I think they're definitely worth listening to. One is the Consumer VC. Then there's another one called 20-Minute VC, and then a couple others that have been around for quite some time, which are How I Built This and Masters of Scale. I'd say How I Built This and Masters of Scale are very focused on founder journeys and how companies that many of us know today have become successful. So I think it's really interesting to see kind of the struggles and challenges that happened along the way, and then also what opportunities allow them to reach a certain level of scale. And then I'd say the Consumer VC and 20-Minute VC are more targeted at VCs and how different VCs think and make decisions. And I think that's also been really helpful for me.
Would you travel to Cape Town for business or leisure? What if you could combine the two? Well, you can. With Optimum African Experience, Cape Town Leisure Experience, with partners such as the University of Cape Town, CEDA, Medina, Luminary, and Prime Focus. Experience the best of Africa.
Africa is a continent full of potential, but potential means nothing if we don't take action to create value. Let us take action. Thank you for listening to this episode. Don't forget to post and share this episode on your social media platforms. It will help us reach our mission of sharing knowledge about intra-Africa trade and making it available to as many people as possible. Let us grow our continent. We can go far, fast, together. If you can please leave a review on our podcast page or on Apple Podcasts.